Well, wouldn't you know it, we had another volatile weekend with crypto breaking down from key support. But today, we had a substantial rally to end the day as a ceasefire deal was struck in the Middle East. Now, last Monday, we talked about markets not taking this Middle East conflict too seriously. And we could see that because oil prices were not surpassing their initial spike from Friday, June 13th. Gold remained relatively steady, and the US dollar wasn't rallying as it normally would in this kind of environment. Also, it seemed that every dip we were getting was being bought up, and the market, in this sense, really has a way of giving you all the answers. I know that might sound a bit silly or far-fetched to say, oh, the market can give you all the answers. But this aggregate weighing machine of millions of players globally, I think there are 500 million investors estimated around the world, has a way of balancing out risk and value quite accurately. It's not too dissimilar from how something like Polymarket can really accurately predict the outcome of events. So, are we in the clear for all-time highs? Well, on Friday, we took a deep dive into time analysis. Check that out if you haven't seen it already. It's a good one. And we expected a turnaround point for crypto between the 21st and the 23rd of June. And if the low of yesterday holds, that analysis would be playing out perfectly. However, no matter how perfect the analysis looks, we always have to keep our head out the window and analyze both sides of the market. And the two consecutive bad weekly candle closes we've had on Bitcoin have really caused some damage to the chart structure that we need to discuss. So let's dive into the charts to see if today's rally can get us back on the path of incoming all-time highs, or if we still need some more time for things to balance out in markets. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom, and I hope you all had a more restful weekend than I did, because it was wild to keep up with the news, and the swings in crypto were even wilder. Before we dive into the content, I was chatting with the like and the subscribe button and the comment box, and they're feeling a little bit lonely, so if you could go visit those, just give them a little caress, let them know you care. They would really appreciate it, and it also helps the content get out there to more people. Now, we're going to start with a new format today that I discussed on Friday that you guys all seem on board with, so thank you for giving me your feedback. But since we just had the weekly candle close for crypto yesterday, we're going to focus a bit more on the crypto charts today, really taking a deep dive on the TA. We're still obviously going to touch on the key equity charts, but we're going to do more of the TA deep dive at the end of the week on Friday when we get the weekly candle close for those. Now, one other thing I wanted to mention, because I got a comment with someone who wasn't aware of this, but I break each video out into chapters. So for the long videos, like Friday, I think was 35 or 40 minutes, I break down every chart by chapter, so you can just go into the video description and it'll have each section broken out by title, and you can just click on it and it'll take you right to that point in the video. So if you're just interested in equities or commodities or the crypto section, you can navigate right to that easily and save yourself some time. We unfortunately had another bad weekly candle close for Bitcoin, but I'm really glad I waited for today's daily candle to close before recording, because the massive reversal candle that we saw got us back above key levels and may have just reset us to a point where we could classify yesterday's breakdown as a bit of deviation. And the same can be said, thankfully, for Solana and many other alts too. Now, despite some of the cracks we're seeing, the thing that has me feeling more positive is that if yesterday is our low, not only does that align with our time analysis perfectly, but it also aligns perfectly with the scenario we discussed on Friday, where if you're in a consolidation range, often you will sweep those lows and see a quick reversal before the market turns in the other direction. And we talked about exactly that scenario and hitting $98,000 as the most likely target. So the market makers do that to wipe out those leveraged longs that are sitting right below the consolidation range. They think they're safe, take them out, then reverse the price action back up. So let's get into the charts to see what they're saying. And you know what? One more thing. If you tuned into DCA Live this morning, don't listen to what Marty Party is saying about TA not working. I'm not here to necessarily defend TA, but if you've followed along for any amount of time, you can see how TA does work, and it gives us exact support, resistance, price targets, pullbacks. I mean, he even mentioned the 50%, which is a tool we use here all the time. So I want you to listen to good inputs. Marty is very smart when it comes to the technology side of things, but I suspect he may not know how to apply TA properly. So that, mixed with his taste in music, really has us in the bald men in finance community wanting to put him off to the side a little bit. Like, we'll take Mike McGlone, we'll even take Patrick Boyle or Mark Andreessen, but I feel like Marty and Kramer and O'Leary, they need to start their own faction. All right, so here we are in the S&P 500, and you can see obviously the massive reversal candle we had today that actually outperformed the NASDAQ, which is notable because the NASDAQ has been outperforming us during this whole run here. So if we recap our time analysis, we were talking on Friday about there being 45 days from the correction bottom to our local top right here, and we're anticipating consolidation to go 60 bars, which would put us to July 3rd. And we talked about also historically the last 2 weeks of June underperforming and the first 2 weeks of July overperforming. So that's still my base case. We're still below resistance here on the center cloud on the confluence model. Now we still haven't broken these two highs. And the one thing that would tell us that maybe our analysis is shifting and that we have to switch our thinking from a few more days of consolidation before breakout to a breakout happening sooner would be breaking these previous highs, and then perhaps that puts us on track for that same seasonal turning point on the 23rd right here that we analyzed for crypto being the turning point for the S&P 500 and the NASDAQ as well. So that would assume this here holding as our low and then turning away higher from there. But I'm still putting the odds in the favor of a bit more consolidation just to cool off the charts before we make higher highs. And I wouldn't even mind it if we test some of these lower support levels here. Again, 5,800 is our key zone on the S&P. And I just wouldn't want to see us close below this swing low here to signify that any correction would just be a quicker move down and a bounce away. If we look briefly at the NASDAQ, you can see that obviously the NASDAQ is a very similar chart. But while the NASDAQ has been overperforming, today's candle was not able to exceed the swing high of Friday's candle like we did on the S&P 500. So this is a notable change in strength, at least for this one daily close. Now we have to cover off on currencies and commodities before we get into the rest of the charts because they're telling us so much. And the one thing I will say on the dollar, even though we broke down again today, is that the dollar is so heavily shorted now, and we are anticipating that we're in more of a macro breakdown on the dollar, and we'll eventually test that 96.4 to that 94.6 level right here, which has played a lot of historical support and resistance. But since the dollar is so heavily shorted right now, it wouldn't surprise me to see a rally. And any rally we see, even if we pass this high, I just wouldn't want to see us getting over this key resistance zone of 103. Okay, moving on to oil, which just had an absolutely massive reversal candle today. I can't remember a massive reversal candle like this in oil ever, but we were already saying on this Friday candle, when we shot up initially and then rejected, that's what we were saying about markets not taking this too seriously. And oil had already been in an uptrend for a couple of months at that point. So I was seeing this as kind of our blow off top of sorts in oil, and saying that we would most likely come back down from here. Now, with the tensions this weekend and the U.S. taking action, obviously things spiked up a little bit. Talk of the Strait of Hormuz closing, but the peace deal today brought things back down. We're back below our 200-day moving average. We retested that for resistance now. And the notable thing here is this red band is a support zone that I've had marked for oil that has gone back the last couple of years. We've always found support in this zone, and we wicked down exactly to the bottom of that at $65 a barrel. These previous tops here, you can see once you break below a range, how it plays resistance and now how it can play support on the flip side. All right, let's look really quickly at gold, which continued to break down today, which is telling you that we're moving into more of a risk-on mindset in markets. And just to cover on silver, because we've been talking about silver lagging gold, and I got in a breakout trade right here where we passed all-time highs, and we've been consolidating a bit. And I was looking at this today on the 4-hour time frame, just noticing that our point of control was right here and we were testing it again. And I was looking at this level to see if we could break out and push through and go on the next leg up for silver. Well, the talks of the ceasefire deal in the Middle East made silver reject. But the good thing is we've been finding support right here at $35. So I like when we're finding confluence right now at a zone like this. And I, from my entry, have actually moved my stop order to just below that level. So if we do have a reversal, I'm still in profits on the trade and I'm risk-free. That's always a goal with any kind of short-term trade. So my entry was here. And as things move up, you want to get risk-free as quickly as possible. And as this was wicking down and consolidating, I didn't really know where that zone was at first. But as soon as you find confluence, obviously you can see that right there, and you want to give yourself some tolerance for things to flush down a little bit past that. But I've now set my stop order here at 35.25, and if silver breaks down, I still make a little bit off the trade, and I'm totally risk-free, and it gives me an opportunity to find another entry down the line. Okay, before we get into crypto, let's just look at SMH really quickly for the semiconductors. And you can see, like with the rest of the market, we rallied up today into the close, and we're really making a lot of tops here at 265, at least on the ETF. And so you can look at the individual semiconductor names you're playing to see what they're doing. But levels like this on the chart are always very interesting to me because it gives you a clear point to anticipate rejection. But if you get a breakout here too, this is going to be the line in the sand for us now on SMH. And a break of this level, and ideally a break and a retest of support. I'm not saying it's going to happen right here, but whenever it breaks through, break of the level, retest for support, and bounce away, this is going to correspond with when the S&P 500 breaks into all-time highs, because semiconductors are such a big weighting of those indices, and we need them to come along with the rest of the market into new all-time highs if the indices are going to see those all-time highs as well. So keep your eyes on this over the next couple weeks. Maybe draw a line like I just did and set an alert. You know what? I'm going to set an alert right now. Price crossing up once per bar, open-ended, create. And now I know when we are moving up. And actually, let me just adjust that past this previous wick. Okay, save, all set. Let's move on to the next chart. Okay, moving on to Bitcoin, and I'm going to start with the ugly first before I get into the good. And we're going to start here on the weekly time frame because we've had a key breakdown here from the 62 level on the Bitcoin RSI. And if you've watched my past video on the Bitcoin weekly RSI, you'll see these two lines. I have one drawn here at, let's say, 43.77, which generally dictates us being in a bull market or a bear market. Anywhere below there is considered bear market territory. And then anywhere above or below 62, above 62 is the accelerated pace of our bull markets. And then anywhere below 62 marks more of a correction or a consolidation period. And each of these breakdowns in our last 3 bull markets since 2017, we've had 9 instances of breaking below the 62. Here it dipped down twice, so I guess you could say 10 because both of these corrections match the percentage criteria. But every time we've broken down from the 62, it doesn't mean that the bull market is over, but 8 out of those 9 times, it's led to at least a 10% correction. Usually more, usually much more. There's only one that's around that 10% range. So those are fairly good odds, 8 out of 9 times, that we may be seeing lower prices. Now, you can see that the RSI is reversing back up with the strong price action we had just on the one-day candle today. So if this can close the week back above the 62, we could just consider this deviation and take that off the cards, but it is something we need to pay attention to. So really keep your eyes on this on the Sunday weekly candle close, which happens at midnight UTC. Now, if we just zoom in a little bit on the weekly, the thing I would like to see is most definitely a close above these previous candle close highs, which is at 104,700 for sake of round numbers. We're above that right now. So at the end of the week, I want to see this candle close above that, ideally engulfing this previous candle here with the height of the body of this candle, but we just need to see how that plays out by the end of the week. Now, if we go into the daily time frame, the other good thing for us is that we just wicked below our consolidation range and closed strongly back up. So that's what we were talking about wanting to see a flush of the lows and a quick reversal candle. And in today's candle, we engulfed 3 days of downward price action. It was very impressive. However, if we zoom in a little bit more, you can see that we did find resistance at this previous trend line and near our 50% level of that previous consolidation range. The thing we need to do now is adjust our Fibonacci levels to the new range low. So I'm just going to take this right here and we'll draw this out to our range low. And you can see that gives us a new 50% level of the range right here, which seems to make sense with where we are getting some of these daily candle closes and where these wicks and these lows are coming in. So whenever you see things aligning like that, that lets me know that, okay, this feels like a legitimate low just based off the Fibonacci levels. If this didn't align with anything and we had to extend it down a little bit more to get something to fit the price action a bit better, it might tell me that, oh, maybe this isn't the bottom of the range and we're going to have to keep extending this box. But it's perfectly acceptable too to draw multiple fib extensions. So if you want to keep one on your charts as well for the previous consolidation range and this new consolidation range, just to have both those lines of where to anticipate support and resistance, you can absolutely do that. But I'm just going to clean this up for now and take that one off. The thing I'll just do, because that previous 50% was important, I'll just draw a horizontal line there, and then I will remove this previous Fibonacci level. Now, I did get one question about how to draw these Fibonacci levels and which swings to consider. So you always want to draw them off of extreme highs and extreme lows. So if we are imagining just big swings in the chart, and let me zoom out even a little bit more. Okay, so big swings in the chart, we would imagine that this is a high and this is a low, that's a swing. And then this is a low, that's a high, that's a swing. And then for this range, that was our high, and this was our low. So that's why we were drawing this range here initially. And if we take this overall range and we draw another Fibonacci level, so we're going off the high of the swing all the way to the bottom there. And then you can see how this 50% lines up with this line that I already have drawn in at that 93,000. We're also saying that the 93,000 is our key underside support. You can see how the price action bounces off of it there. And you can see kind of an ugly head and shoulders pattern here that has been targeting that $93 price range. So there's a lot of confluence there, but hopefully we don't have to go down there to test that and we can just reverse away from here. Now, the last thing I'll just say on trend lines that I find remarkable is how after all this time has passed, how they can still provide support and resistance. So I had this underside trend line drawn here. So this is where I was first scouting that head and shoulders pattern here that I was saying has that price target of the $93,000. But you can see how the trend line provides support. Even after we deviated here, I think, was that the Trump Elon news? It might have been. We found support from it again here. And now as we came back up, we found resistance at that line, and we found support at this trend line underneath. So I would consider these minor trend lines, not so much major trend lines, but it's still interesting, even these little wicks, how they always seem to gravitate towards that price action. Now, to sum up my view on Bitcoin, this reversal candle today got me a lot more bullish, as well as this low lining up with our time analysis and just our TA of a sweep of the lows being most probable. But it has some work to do. So we need to see that weekly candle close above 104,000, let's say 450. And we also want to see that weekly RSI in the stronger half of the range above the 62 again. So Bitcoin has a bit of work to do, but because of that RSI breakdown and still in the background, this pattern targeting 93K, since we saw that confirm on the weekly, I told myself already a few days ago, if this level below 62 confirms on the RSI, I'm obviously not going to sell any of my ETFs or any of my spot Bitcoin because I've been holding that for a long time. But I am going to de-risk a little bit with some of my Bitcoin proxies. So I sold some of my miners today and some of the Bitcoin treasury plays just because those are much more volatile. And that was my way of just taking some risk off the table, not knowing how this is going to play out. And the price I'm paying for taking that risk off the table is that if I'm incorrect and we don't see those lower prices, that I'm going to have to buy back in at higher prices and I'm going to miss some of the upward price action. Okay, moving over to Solana, and like with Bitcoin, I'll just start with some of the ugly TA first, and then I'll move into the good TA. So we had this double top here, and the price target for that was $133, which was right around here. and we wicked below that. And with price targets from these kinds of top targets or bottoming targets, sometimes if it's a weak trend, it won't exactly hit the price target. But if it's a strong downtrend, like we had with all of the Middle East scare, oftentimes it can overshoot the price target slightly. But the good thing was we found support exactly at this line that we've had drawn in, and this red box represents our area of most support on the underside for Solana. So we did bounce off of that $126, and I actually bought some spot Solana yesterday. And the good thing today, because yesterday I was very concerned about the Solana chart, is that we closed back above the 50% level, and we also had a mild back test of that for support on today's candle. I was really watching this, and if we would have rejected from the 50%, I would have started to de-risk some of my Solana position, even though I really believe in Solana long term. Just a rejection at the 50% with this breakdown in price action would have this chart looking very weak. If we're just zooming way out and we're talking about lower highs, I mean, you can see huge move down, lower high, and then would we have made a lower low? That would be a very bad sign. But what I'm hoping for is that we move down, we make a lower high, a higher low, and then eventually we make a higher high and hopefully break above that 50% level. So it would be really great to see this hold as our bottom in Solana. If that 126, let's just say to give us some tolerance, down to 120 price range breaks, then I would be concerned for more downside action. I don't know what would be happening in the macro, but I think it's important that all of you mark that 120 level up on your charts, that if that breaks, be watching for a break of these lows, and particularly if these break, something is wrong, and we need to consider that we may be in a different phase of the market than we're anticipating. So just some things on how I could tell this was feeling like a local bottom this weekend. Well, in the crypto space, we had over $1 billion of liquidations, which normally leads to a turnaround. We were also into key support, and we're on the 1 hour right now. But if you go into the 4 hour time frame, we were severely overbought. We're bottoming on the RSI on the daily time frame as well. And on this entire downtrend, I'm drawing these downtrending resistance lines. And this would be what I would consider our major downtrending resistance, running off the very peak here at 167. And then I have another downtrending resistance line here, and a third downtrending resistance line for the steepest part of our price action. And just a quick aside, if you inverted this chart, this would very much also look like a blow off top, where your price action is moving at one clip and then accelerates and then has this final blow off move. And we even had a double bottom, or if this chart was flipped, it would be a double top that can lead to a reversal. And as we're coming back into these trend lines, I'm anticipating a little bit of resistance, which we had for a couple hours here and then broke through. These center clouds, as I've talked about, you often, when you break in, you back test them for support. So that was another good sign. This next trend line we sliced right through. And then this major trend line, I would anticipate giving us the most resistance, which you can see we wicked away from that today. But luckily, at least so far, we've held above the 50%. So for this chart to remain strong, I would like to see us hold above the 50% at that 141.20, 141.30, bounce away from that and get through this trend line. Maybe we retest that for support and then continue our path up. That would be the strongest scenario. Now, if we break below this 50% line, that's fine for a bit. Maybe we find support there, but we do want to close our week above it, and we want to get above this final trend line. And given that the 1 hour chart is a bit overheated and the 4 hour chart still has some room to run, I think we might just be cooling off and going on another move over the next day or two. Okay, if we just go over to the ETH chart briefly, there were some massive sells on Ethereum last week, and this was looking a bit like Wyckoff distribution. We had a big breakdown with the rest of the market, but ETH has also had a healthy bounce. I would suggest that it's kind of retesting the bottom of that range now as resistance. So if ETH can reclaim this and get back into this consolidation range, you can see it's our point of control, our most traded zone. That would be a sign of strength. And if we break down, we have support, obviously, where we found it. And in terms of support and resistance working, just to prove it to you, look where it bounced, where this previous peak is, and where all this prior support came in, 2100 is clearly a very key and important level to the underside for Ethereum. And then just looking at the VRVP, like we broke down on Friday, you have support every $100 roughly at 2000, 1900, 1800, all the way down. And then, more support here around 1600. So we want to see Ethereum get into there. And just in terms of reading volume, these kinds of volume gap areas, price action generally moves a bit more quickly through those. You can see we have a volume gap there. So if you're just drawing this out, say, as a little bit of a box for the volume gap, and you extend that out back in time, you can see how some of these faster moves slice through those low volume areas. And then where you have a high volume cluster, and this won't be perfect, I'll just adjust it to the high trading volume cluster, you can see how that corresponds to more of your consolidation ranges. And again, down here, we have a gap in the VRVP, and you can see how price action wicks through that, generally speaking, a little bit more quickly. So in terms of the market, spending 80% of its time figuring out which direction it wants to move, and then 20% of the time getting there, you can use volume a lot to identify when you might be getting into one of those getting there zones. Okay, just bringing up FC briefly because I always talk about it respecting the TA so well, and it was a similar example to Solana where I was drawing our major downtrending resistance, which goes way back to the peak there. So that's our major line to get above, and then we had a minor and a minor downtrending resistance, and this minor one we flirted with breaking above a couple times until we finally broke through, back tested it for support. And the thing I always say when you draw these is that when you break away from one, you can very quickly anticipate the price action to move more readily to the next line. So you can see we broke through fairly easy yesterday, and then we back tested that for support quite some time. This morning had a little bit of a fake out, and I was actually getting a little bit worried because I was layering into a long position here as we were into support on the cloud, and I was quickly down almost $1,000 plus on that. But then we reversed up, and we quickly went up to this major resistance line, which we've now broken through, and we're back testing for support. So if we can break away from this in a meaningful way, the clouds are starting to turn. It looks like the charts are set up. This has already been a massive move. I mean, just from the bottom a couple days ago, 34% up. But I need to project some overhead targets. I mean, I think this previous peak here at $1.32, which has been kind of a major resistance zone between 129 to 132, would be the next area that I would anticipate some resistance overhead. But to just take a little deeper dive on the TA, so obviously right now the 1 hour chart's overheated. We need it to cool off a little bit. The 4 hour and daily have plenty of room to run. But this one also gave us a double bottom pattern. And it's not a straight double bottom, but you can still draw the line, and then you project out this center line. So center line goes here, and then you project it out to the top. And that gave us this price target for this current move, which was at $1.06. And wouldn't you know it, that's where our price action topped out at $1.06. So in terms of just patterns, levels, TA playing out beautifully on this chart, it is a gem to perp trade or day trade, even if you're not using leverage. I mean, 34% is not bad in a couple of days if you're just trading spot. So highly recommend it if you have some TA skills under your belt. Okay, moving on to the pair trade chart, and my apologies, I noticed that the framing of my trading view background got moved slightly and the date range was cut off. So hopefully that didn't throw you off too much on any of those charts, but it's fixed now. So on the MicroStrategy Tesla pair trade, I won't go into the charts individually because we just don't have time today, but we were talking on Friday how even though this was a fairly neutral trend, it was most likely going to continue in the favor of Tesla because when we get in this lower cloud, it has a more significant drop. And so right now, I'm still sticking with Tesla, but as we get to these extreme levels, we often talk about the simplest trade being just flipping when the trend flips, but you're then not nailing these extreme points in the chart. So today would be a good example where you can use a bit of discretion. And if you want to just take a portion of your bag to start rotating it, like, I don't know, maybe 20, 30%, whatever feels right to you, you could do that in anticipation because this trend might continue and maybe Tesla keeps rallying, but we're close to 1-to-1, which seems like a good flip compared to where we came from at a 1.3 ratio. Okay, just revisiting Circle really quickly because I took 16% of my position off today because we've had these couple of massive candles. Just the morning candle was really large compared to anything we've seen. I'm on the hourly right now, but that is just indicative to me of this getting a little bit toppy. We know the RSI is way off the charts on all the time frames. And so taking that 16% off actually more than covered my IPO position. And the only liability is when you buy an IPO, you're not permitted to sell it for the first 30 days. It's considered flipping the IPO. And so by selling that 16% position, I'm covering my entries, so now the trade is totally risk-free. Obviously, I don't want this to drop back down, but it also limits me on my brokerage from buying another IPO for 60 days. Well, I'm okay saying, I don't know. I mean, maybe there'll be a great IPO that comes up in the next 60 days. I'm going to be kicking myself for this, but I'm okay taking on that risk of not being able to buy another IPO for 2 months because I flipped this position. The risk to reward seemed worthwhile to me. Okay, one more I just want to revisit, which is UPXI, which is a Solana and Bitcoin treasury play. And I got into this last week and then I got stopped out on Friday as we wicked down because I had my stop loss too tight. Well, they had earnings today. They dropped down on low trading volume after hours to $3.75. It's not showing the after hours price action here, but I re-entered a position because the risk to reward seemed worthwhile to me if we're still in a crypto bull market and price action is going to recover. So the pullback was due to an EPS miss on the earnings report and the market feeling like some of the steam is coming out of both crypto and the crypto treasury plays. But CEP still has a price target on this of $16. So I'm not saying $16 is going to hit, but for me to nibble on a small position of a few thousand shares at 375, I can set a tight stop to just see where it's going to go. It seemed like this one was worth the gamble, and I'm calling it a gamble because these kinds of treasury plays with a company in the background that doesn't have great fundamentals does feel to me like a gamble, but they can be fun to trade with a small portion of your bag. So just make sure you're managing your risk appropriately. I set my stop 25 cents already below my entry. So if it does drop more, I'm not risking too much on the trade. All right, so that's it for the charts. You know what to look out for. We're into some key resistance on crypto. We're also into key resistance overhead for the key indices, the S&P 500 and the NASDAQ. So the news are most likely going to influence things this week. Positive news could maybe push us over that hump, but we definitely have some work to do, and I suspect some consolidation is most likely going to be our path forward for the next few days. We also have Fed Chair Powell speaking tomorrow on Tuesday and on Wednesday. He's testifying, so that could move markets a little bit. We have unemployment claims on Thursday, and then core PCE on Friday. So some of the weekly events to watch out for. I look forward to seeing you guys on Friday for the weekly wrap up. Bye for now.